Here's your grid. These levels here. Okay, you see that? That is the grid aspect horizontally. Vertically, the vertical axis is the macro start time. So we have vertical, we have the beginning of the macro, and now divide the macro, top of the hour, right there. So now you have two primary functions. You're looking for a specific key level that's based on a octant or a quadrant level. You have to know what you're measuring and grading. It's an efficiency, it's an opening range gap, it's a new week opening gap, it's a new day opening gap. You're literally picking these very generic things I told you to focus on. We have a beginning of a macro over here. So that will close the grid time-wise. But now watch what happens. Every single time we get to a octant or a quadrant level, you're looking for a PDA form. Here, I've already outlined it in the order block. It's occurring at the octant inside the first portion of the macro. The second one, the lowest candle forms, look, the lowest one forms at the close of the macro. So we have horizontal and vertical reference points. And once we get to an octant or a quadrant, you have to know your bias. You have to know what you're looking for. Okay. So if you think that the market's likely to draw up above this high or draw down to the low of that daily suspension block, the low of that blue shaded area down here, if you think it's going to retrace back down to there, then you can go through the process of looking for things to time it. Candlestick forming right there on that octant before you get to consequent encroachment, that line right here. We're going to see it move lower because we've seen it pump straight out of the opening and we're up in here. And now look what it's doing. It's failing to get to that consequent encroachment level. And we're fast approaching what? A new macro, 1050. So you can look at this right here. We're at this lower octant. We have a little bit of a gap here too. The market breaks down. And then once you get this close outside of it, outside of what? This positive balance, self-sign efficiency that is validated right here on this octant. Failure, breakdown, close outside of it. That validates this as an inversion fair value gap. Its first utilization is that of buy-side delivery. And then qualifying, it's now a bearish inversion fair value gap. Focus on the midpoint of it. The bodies need to stay out of the upper half. It can wick into it like it does right here. And if it does, you can short it just ahead of the macro. You don't have to take trades only in macro time. It's just a very sweet indication of time having an influence over price.